Good morning, dear students. We have already discussed two methods of inflation accounting. They are current purchasing power accounting and current cost accounting. Then now we are going to discuss the third method, that is specific and general price level accounting. SGPLA, specific and general price level accounting. This approach is a combination of the two approaches, that is current cost accounting and current purchasing power accounting. So this approach combines the current cost accounting method and current purchasing power accounting methods. And financial statements can be prepared by combining the factors of CCA and CPP. We will prepare financial statements by combining the factors of current purchasing power accounting and current cost accounting. This approach takes into consideration both the changes in specific prices of individual items and the influences of general price level charges. So we have already studied that in current purchasing power accounting, we will take changes in the general price level, and in current cost accounting, we take specific prices of individual items. So this method combines the both CCA method and the CPP method. So let us discuss an illustration. A company has a number of plants. The year of purchase given 2005. Cost of the plant is 40,000. Life in years 20 years. Rate of depreciation 5%. Hypothetical price index at the time of purchase 100. And another plant was purchased in the year 2013. Cost 50,000. Life for 10 years. Rate of depreciation 10%. Then hypothetical price index at the time of purchase 200. And another plant purchased in the year 2019, cost 60,000, life in years 8 years, rate of depreciation 12.5. Then hypothetical price index is 300. Okay. Keeping in view the above facts, we are required to show entries necessary for recording the changes in the ledger using index numbers. So the calculation, statement of revaluation of fixed assets. First plant was purchased in the year 2005. Historical cost given in the question 40,000. Index number at the time of purchase, that is in the year 2005, index number was 100. So current valuation equal to 40,000 into current year index is 300 divided by index at the time of purchase is 100, that is equal to 1,20,000 is the current value of the plant. And next asset was purchased in the year 2013. Historical cost is 50,000. Index number at the time of purchase, that is in the year 2013 is 200. Then current value of the plant is 50,000 into 300 divided by, at the time of purchase, the index was 200, equal to 75,000. And the next plant was purchased in the year 2019. 60,000 is the historical cost, index number 300 at the time of purchase. So the current valuation will be 60,000 into 300 divided by 300 is equal to 60,000. So current valuation total 2,55,000. Historical cost total 1,50,000. Then statement of depreciation that we are going to prepare. Year 2005, 13, 2019. Total number of years the plant was used. So first plant was purchased in the year 2005. Okay, up to 2019, then we have used the asset for 15 years. 15 years. And the plant purchased in the year 2013 was used for 7 years. And the plant purchased in the year 2019 was used for 1 year. The rate of depreciation given in the question 5%, 10% and 12.5%. Historical cost given in the question 40,000, 50,000 and 60,000. Total will be 1,50,000. Depreciation, total depreciation based on historical cost basis. So here 40,000 is the cost of assets, and total number of years used is life of the asset is life of the asset how 20. Okay, 20. Okay, so 40,000 divided by 20 is equal to 2,000. 2,000 is the 1 year depreciation. Okay, and the plant was used for 15 years. So 2,000 into 15 is equal to 30,000. Cost of the asset is 40,000. Then life of the asset is 20. So 40,000 divided by 20 is equal to 2,000. 2,000 into 15 is equal to 30,000. Likewise, 50,000 is the historical cost. Then 10 is the life. So 50,000 divided by 10 is equal to 5,000. 5,000 into 7 is equal to 35,000. And next case 6,000. 60,000 is the value. Then life of the asset was 8. Okay. So here 60,000 divided by 8 into 1 is equal to 7,500. So total depreciation under historical cost basis will be 72,500. Okay. Then value on the basis of index number that you have already calculated 1,20,000, 75,000 and 60,000. Total will be 2,55,000. And depreciation based on current value method. So here 1,20,000 into 5% is the depreciation, and for 15 years is equal to 90,000. 75,000 into 10% into 7 years is equal to 52,500. 60,000 into 12.5% into for 1 year 7,500. So total depreciation will be 1,50,000. So here current value basis depreciation is 1,50,000. Historical basis 72,500. So 1,50,000 minus 72,500. That will be charged to profit and loss account. And the historical basis the cost of the asset is 1,50,000 and value on the basis of index number is 2,55,000. So difference between these two figures will be 2,55,000 minus 1,50,000 is equal to 1,05,000. Okay, that is the revalued value of the asset. So next, what are the journal entries? First one, planned accounted to capital reserve. Planned accounted to capital reserve. Revaluation of plant on index number basis. Okay, so here 1,05,000. Then 2,55,000. That is value on the basis of a current cost. 2,55,000 minus historical cost 1,50,000 is equal to 1,05,000. Then depreciation. Difference in the depreciation is charged to profit and loss account. The journal entry will be like this. Profit and loss account to depreciation provision 77,500. That is excess of depreciation required on current value basis. That is 1,50,000 is the current value depreciation minus 72,500. That is historical base depreciation is equal to 77,500. Okay. The next method is fourth method is periodic revaluation of fixed assets along with adoption of LIFO method of inventory. That means assets are periodically revalued, and for materials we are using LIFO methods, or for inventory we are using LIFO method for valuation. Okay. So assets are revalued periodically and the inventory valued on the basis of LIFO method. Okay, the advocates of this method are of the view that periodic revaluation of fixed assets along with the adoption of LIFO method can considerably reduce the effect of increase in prices. So we can reduce the increase in the prices by adopting this particular method continuously or periodically. We are revaluing fixed assets and we are adopting LIFO method for valuing inventory. Okay. The purpose of periodic revaluation of fixed asset is to charge depreciation on current cost of replacement. For what purpose we are periodically revaluing fixed assets? So we will charge depreciation based on the current cost of the asset, current replacement cost of the asset. Then what is the purpose of following LIFO method? The objective of following LIFO method is to charge current cost of goods consumed to profit and loss account. Last in, first out. Last in, first out. So we are charging the current price, last purchased price for the cost of goods. Okay. Then now we are going to discuss what are the important advantages of price level accounting and then disadvantages of price level accounting. First of all, advantages. First advantage is accounting adjusted to price level charges. Accounting adjusted to price level charges depreciation on current value of assets. അപ്പോൾ depreciation എങ്ങനെയാണ് ചാർജ് ചെയ്യുന്നത്? Based on the current value of assets. Okay. Balance sheet exhibits a true and a fair view of financial position of a firm because assets are shown at their current values. All assets are revalued. Okay. All assets are revalued based upon the inflation. So the balance sheet will exhibit a true and fair view of the financial position of the business. Next advantage is inflation accounting helps in making better comparison of profitability of two plans set up at different dates. Okay, so two plans are set up on at different rates. Then using inflation accounting, we can compare the profitability of the two plans. The next advantage is financial ratios. We will calculate financial ratios. Okay, financial ratios calculated on the basis of balance sheet and profit and loss account adjusted to current values would provide more meaningful information. All assets are converted using the purchasing power of money and the inventories are also adjusted. So the financial ratios calculated on the basis of these figures will give meaningful information to the management. And next one is the rate of return on capital employed adjusted to current price index is more useful in the valuation of business by its owners, creditors and management because all these figures are based on the current price of the assets. Okay. And then now what are the limitations of price level accounting? First one is charging depreciation on current values of fixed assets is not acceptable to income tax authorities. So you know that income tax authorities accept depreciation charged on the basis of historical costs. Okay. Then second limitation is that too many calculations are involved for adjusting accounting to changing prices and making financial statement complicated. So many calculations are there for converting the historical values into current costs. Okay, so the preparation of financial statements will be complicated. Then the third disadvantage is that charging depreciation is a process of distribution of original cost of fixed assets over its effective life. That is the concept of depreciation. Charging depreciation is a process of distribution of original cost of fixed asset over its effective life. That is the equation. Original cost of the asset divided by life of the asset, effective life of the asset. That is the equation used for calculation of depreciation. So charging anything in excess over the effective life of an asset is against the concept of depreciation. So charging depreciation on the basis of current cost method is against the concept of depreciation. Next limitation is that adjusting accounts to changing prices is never ending process. What is the reason? Because prices go on changing every day. So uh, changing the prices from historical cost to the current cost will be a difficult task as far as the business is concerned. Then in times, next disadvantage is in times of deflation, lower depreciation will be charged because assets will have a lower current value. So it will increase the profit of the business organization, which will lead to payment of excessive dividend. So when profit increases, we will declare more dividend to the shareholders. So during inflation, higher depreciation will be charged because the value of the asset will be high. And in times of deflation, what will happen? Lower depreciation will be charged. So when the depreciation is very less, the amount of profit will be very high. So it will increase the profit and it will lead to the payment of excessive dividend to the equity shareholders. Okay, so these are the important disadvantages of inflation accounting. Thank you.